I think that the chairman of ECB is right. In Europe, the collapse of Silicon Valley Bank would not have occurred due to the rules, first of all, but also to the pervasive controls that are applied on our continent. At the same time, liquidity mechanisms are easily available when an emergency situation comes out. It appears, let me say that both the management and the supervisor of Silicon Valley Bank were unaware of two fundamental rules of banking: liquidity and concentration of risks. And liquidity becomes unmanageable when a bank has just long-term assets and mostly short-term deposits. I mean, if you add that the bank's portfolio of security was rapidly losing value, I mean, without very strong actions, the situation becomes unmanageable. At the same time, concentration risk on this other side is unsustainable when a bank loans and deposits are almost entirely tied and concentrated on one sector of the economy. So that disaster could really be avoided just through the normal rules and controls that in Europe are normal for both large and small banks.
Right. Yesterday, I think a lot of investors were frustrated, critical, you could even say in an uproar at the ECB's decision to go ahead with the 50 basis point rate hike, given the market turmoil, the uncertainty, and all the risks that they believe lie ahead for the economy and for the banks. Christine Lagarde tried to emphasize that the bank has other tools to deal with financial stability, and rates are there to deal with inflation. Is that a fair or realistic assessment? And do you think that it was a safe or right decision to go for the 50 basis point hike?
Let's say that the decision was taken, but now I do believe it's enough. I realize that the job of central banks is really difficult because their monetary policy actions can have opposite outcomes, both in terms of price stability on the one side and financial stability on the other side. And for sure, inflation has to be reduced drastically, but now collateral damages cannot be ignored. I would also suggest that maybe the 2% absolute inflation target can maybe be a bit increased. We know that in Europe, the basic roots of inflation are not on the demand side, but are more on the supply side. So monetary policy actions by themselves cannot cure properly the situation. I would be very worried not only about the financial stability, but also about the social stability if a recession, a strong recession, is created through an excessive growth of interest rates by the Central Bank of Europe. So far, I mean, they had to do what they did. I strongly believe that that's enough.